Welcome back to Everything Money. In this video, you will learn about PayPal, the company and its stock. We'll show you our process about how we invest or avoid investing in a company like PayPal. We'll use our 8-pillar system and show you the financials using our software. We'll then predict what we should be paying for this company moving forward using our stock analyzer tool. You want to stay tuned for that. If you want to trade PayPal at a quicker pace, you can join Mo and he'll show us all the charts and trends when it comes to trading. But first, why should you watch this video? I bring your questions about PayPal, which I use on a daily basis for all of our businesses, Paul. I bring your questions about this to a couple guys who own and operate over $100 million in real estate, multiple businesses upstairs, and stocks, and they'll provide us and you with a mindset about how we should invest in. Paul, what do you think about PayPal? I know you use this. I love it. Go ahead.
Thank you, Seth. Guys, follow us on Instagram, Everything Money Investing, and follow our 3 personal accounts. Insert sarcastic comment here. Okay, so here's our exclusive software. We're going to go to the 8 pillars tools. Make the screen just a little bit smaller. PayPal. Now, PayPal was started by my homeboy, Peter Thiel. I don't know how to pronounce his name. Very good chess player. Libertarian. I like him.
Not so much Palantir, though, what he's doing nowadays.
Listen, I'm not anti-Palantir. I'm anti the valuation and the stock price.
Of course.
It's a very different world.
You're right. Tell me about PayPal.
All right, so PayPal, it's down a lot in the last...
Yeah, we get a lot of requests for this on our community, and obviously every business in the world uses this. I use this every single day, Paul, as I said, and
I love paying with PayPal.
Love it, yeah.
308 down to 182.
Come on.
Market cap, 215 billion. Pillar number 1, 5-year PE under 22.5. It is 75. That's an X, 3 times higher.
Uh-oh.
Pillar number 2, 5-year return on capital, return on invested capital greater than 9%. It is 12%, check mark. And no dividend. Understandable, but yeah, stable free cash flow, 5-year average of $4 billion, last year $5 billion.
Remember we saw that Visa's profit margin was 50%?
Yes.
PayPal's drastically different, Paul.
Yeah, because Visa owns the processing system in the sense of like they're the ones that collect the money. PayPal is like they assist in the processing itself. So they got to pay Visa for every single time they collect fees, etc. All right. Pillar number 2. Pillar number 3. We want revenue growth of the last 5 years. So we go to the income statement of our exclusive software. We have 15 billion to 25 billion.
Pretty
check
good.
mark there. With big jumps in the last few years. 10 years ago, it was 5.8 billion.
Gee, look at that.
Not 10 years ago, 8 years ago.
Profit growth is pillar number 4.
Yep. So 2 billion. Nope. 1.57 billion to 4.93. Look at 10 years. Look at 8 years ago, 133 million. So definite check mark here. Over double the profit in the last 5 years.
Wow, shares outstanding. We're humming right along. Pillar number 5.
Guys, shares outstanding. We want shares decreasing on reasonably priced or underpriced companies because we want to get a bigger piece of that pie. If it's expensive, it's okay to see shares increasing, but we want to really focus that. So our pillar is shares decreasing. Go back 5 years ago, 1.2 billion shares outstanding. Now 1.17. So check mark there. Barely down. I'm glad that it's not down a lot. I don't want them overpaying. 5-year PE of 75 screams overpriced. We don't want them buying back shares at overpriced.
Pillar number 6 involves their debt, total long-term liabilities.
Guys, very simple. More debt means much more likely to go bankrupt. If you and your neighbor have the exact same lifestyle, exact same job, exact same house, but they have $1 million in debt, you have 0, who's more likely to go under? Same with companies. So what do? We go back to the main page of our exclusive software. We take the 5-year average free cash flow. We multiply that by 5. That is $20.4 billion. So we want their total long-term liabilities to be under 20.4. Seth, what are you going to guess here?
I mean, I would think they're under.
I would think they're going to be massively under.
Right? I mean...
So we go to the balance sheet of our exclusive software, scroll to the bottom. Oh, 10.75. So almost half.
That's amazing because you think of some of these, you've really got me thinking about companies in general. Like in some of these companies, they got bulldozers and buildings and just networks and just like these processing companies. I asked in the Visa videos, I was like, is this like 5 guys in a room? Like, I mean, how many people?
I mean, software. You have probably tons of developers.
It's incredible.
Yeah. And they shouldn't have a lot of debt. Like, and a well-run business doesn't need a lot of debt to do well. Upstairs we have 8 or 9 businesses. Apart from our real estate businesses, we have no debt on any of the businesses. Everything Money has 0 debt. We just don't need it. My goal is to drive up sales and profit and watch our expenses as a way to get our return, not by levering ourselves up. In private equity companies, they put a lot of debt on companies and pay distributions out. I don't like it.
The big mamma jamma is pillar number 7, Paul. This is free cash flow growth.
So we go to the cash flow statement on our exclusive software. We scroll down here. So remember, guys, free cash flow is the lifeblood of a company. It's cash from operations less your capital expenditures. You can do one of 5 things with that. Pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back in yourself, okay? So cash flow statement here, cash from operations less your capital expenditures. You will not find this line anywhere on a free cash flow statement, on a cash flow statement besides our site. We do the math for you. 2.96 billion 5 years ago, 5 billion last year, check mark for an average of 4 billion. So check mark there. In our last tool, we take the 5-year average free cash flow, we multiply by 20. Why do we do that? It's a starting point for a value. It doesn't mean you go pay or ignore based on this, but it's a starting point, just like PE is. 4 times 20, $80 billion. The market cap is
15.
So it's a massive X. Now, does that mean don't buy the company? No. If a company's going to grow 50% a year for the next 10 years, I'm willing to pay that multiple.
Yeah.
So the question becomes, what's it going to grow? So let's go look at the 8 pillars tool first to see the recap of all these. And this is, look at this, Seth.
Mm-hmm.
Our biggest one. We love this. Visa had the same thing.
Same thing, yeah.
Just overpriced. Right?
Mm-hmm.
So our next step is to do this, the most famous thing in our software now, which is our stock analyzer tool. Every investment's the present value of all future cash flow. So our job is to make assumptions about the future, and that'll tell us what we should pay today for the company. So we go to 8. Paul, getting a little crazy. We're going to drop down, pick 1 to 20 years of analysis. I always pick 10. Let's do some revenue growth assumptions. Mo, help me out here because we don't have 10 years of numbers here, but we know PayPal is doing well. But there's a lot of competition out there.
Yeah, there is. 13, 15, 17?
Hey, we did 10 and 15 last time.
10 and 15?
That makes sense because I want to go high side 17.
Okay, so let's do 10, 13 and a half, and 17. Because I don't think starting at 13 on the low side is being conservative. Profit margin.
I have to believe it's going to stay around that 15, 16%.
Yep, that's what we did a couple months ago, Paul.
Okay.
15, 16. Let's go 15, 17, 19%.
Okay.
Because they have good margin. So as they grow and grow and grow, I don't think they're going to need many more nerds to be running it. So I think their profit margin could stay the same or go higher pretty easily. But they have a lot of competition too, which could drive down profit margin, et cetera.
Same for free cash?
I think so. I think we probably went higher on free cash before.
We did. We did 20 and 22 in the past.
Okay. Let's do 16, 18, and 20. PE.
14, 16,
Yeah,
18.
that's what we did 14, 16 last time. You think 18?
Yeah.
All right, we can show folks.
14, 16, 18.
Yeah.
And then, guys, always a 12.5% return. Why? Because you can get 9 or 10% in an ETF. So if you're going to buy an individual company, get your margin of safety, get your reason for doing it, 12.5% versus the 9 or 10. Hit the analyze button, and I think we're going to see a lot of red here.
Mm-hmm.
It's all red. The low end, guys, low 60s, high end, 150s, in the middle, about 100.
Paul, this stock in February was $300. I mean,
well, that's what I mean. Anything can happen. When did we do the video last?
Just a month ago.
Okay. Guys, this just needs to fall more. At the end of the day, it's just about the assumptions. So let's go up and change the assumptions just a smidge to see if we were too conservative. Let's say I was too conservative in my revenue growth. Let's do Mo's 13, 16, let's go 19. Let's go profit margin of 20, 21, and 22. Same with free cash flow. If you keep all the other assumptions the same, it's actually pretty close, right? 146 is getting closer.
Mm-hmm.
So everything's about the assumptions you make. Are we right or wrong? We don't know. We don't know the future. But it's about looking at the company. Here are the good things for PayPal. It's growing like crazy and people are accepting it more and more. Here are the bad things about PayPal. Square, Stripe, all these other companies are making it very, very easy to accept payments.
The big thing that PayPal did is now their Venmo is going to be on Amazon. That's a big move.
Oh, I forgot about that. You're right.
That's a big moof. So
that's
really
huge.
big. That's really big.
But Amazon Pay is there. Like I like going to I recently bought a rugby shirt from Brooks Brothers. And it
what?
said pay with Amazon Pay. I clicked on it, just logs in your Amazon account and takes care of it for you.
I do love that.
It's awesome.
What's a rugby shirt?
It's just a striped shirt, like
big
Chris,
striped
Chris
shirt.
Farley
Oh, I
would wear.
thought you were like into rugby. I was like, what?
Can you imagine him on the pitch? You know,
I can see him in
tossing
the stands with like
tossing
a
that
bag
ball.
of popcorn and
I
one of
ain't
those
sitting in the
weird
stands.
hats.
I'm not
yeah,
watching
his
you
ears are
idiots.
covered.
Throwing popcorn.
He
in
couldn't
his
wear one of those hats because it would mess up his hair.
I love those hats.
mouth. Would the number on your jersey be 69?
Oh, Mo, grow
420.
up. Grow up. Both of you.
So guys, I think I look at this and think, this is why we use this software. It's been very popular for that reason. It's about looking at the company and saying, what are my assumptions? I can show you, look at this, ready? Remember what I told you guys? 30%, 40%, 50% revenue
Boom.
growth.
Yeah, put him in Tesla's growth
Guess
projection.
what? Look at there.
Boom.
All
it's a
day
buy.
long. But the question is 30, 40, 50% a reasonable number?
For some people, it is.
This is why we use the software.
If you want the software, if looking at these numbers resonates with you, you can have it. And you can have it right now by joining our community. Paul, tell them, baby.
We created the software because our subscribers, people who watch our videos, said, hey, how do we analyze companies without waiting for you to make a video on it? So we said, great, let's make the software. We spent hundreds of thousands, created everything you see here. You get everything you see here. You get it all on your mobile phone. You get 30 years of financial data. You get access to Seth Mo and I. You get the whole 8-pillar analysis, stock analyzer tool. You even get real estate calculator and everything on this main page that is coming soon. You'll see right here, everything coming soon here on the right. You even get the portfolios. You can put up to 50 stocks in a portfolio. It'll tell you how they look all together. You get exclusive daily content. That's 2 or 3 videos a day from Seth Mo and I, only for our users who buy the software. But most importantly, you get access to our chat. You get all of this for only 90 cents per day. Guys, less than a cup of coffee, 90 cents a day, you get all of this. And the best part is, you get this at the same price forever. Your price doesn't go up as our price goes up with it. You only get increases for inflation. You get all of this, 90 cents a day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of going directly to everythingmoney.com is we are not large enough yet to charge a sales tax, so you'll save that for the time being. 90 cents a day. If you just increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it could lead to hundreds of thousands, if not millions. 90 cents a day. Go sign up now.
Want to trade PayPal at a quicker pace? You can join our top tier community, the Bid and Ask Nation. Mo will fondle you and guide you all the way through this trading process. Mo, what's going on over there?
So it's had quite the fall, but it has fallen to these levels of 2020 where we kind of were maybe bottoming out. The fact that we're hitting these support levels with our stochastic being this low, this tells me that maybe this sell-off period is over. So if I was you, I would throw a tracker share on or just put it on a very tight watch list and wait for this thing to turn up. This is in a lot of big financial advisors' portfolios, hedge fund portfolios, and whatnot. So when this starts to move, volume is going to come in and you're going to do very well on it. Now, until that time, I think I would just come over here on a swing trading chart and just trade it from this perspective. You can make money running it up, just like, I can't remember what the last video we did was, but you can just run this up right into the 25-day moving average. Maybe it'll bounce down, run it up to the 50-day moving average. It'll bounce down. So eventually this stochastic is going to turn up and you're going to be able to make money on a day-to-day basis. This is also a good stock that you can trade from a day trading perspective because it does have a lot of daily volatility. It moves 2 to 3% per day. For example, yesterday, you could have got in this thing around 11 o'clock and rode it basically until about, 2:15, and you could have made all of that short coming down. The day before, you could have jumped in it in the afternoon, made a little bit of money going up, and you could have shorted it that day too. So this is a great stock to day trade because you get that intraday volatility almost on a daily basis. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You get the Trading 101 series. You get a video series of all of these rules encompassed in it. The Employed Trader series, which is 6 stocks that I go through every single day and tell you about. So if you're a working person and don't have time to sit on charts, I help you with that. You get my exclusive monthly seminars that I do on Saturdays, once a month, open to Q&A, whatever you guys want to ask, in a Discord community of 900 plus people and growing, and they all want to trade just like you.
This is an exciting company. Obviously, I think great things are ahead, but it's not what you're buying. It is what you're paying. Don't be fooled by other YouTubers. So that is our take on PayPal. We'll keep you updated. Fondle and tickle that thumbs up on the way out, and we'll see you next video. Thanks for watching.